How about this one?
I like it.
How about, whoops, are we still live?
I hope so.
All right, well, we'll roll with it. I can still hear you. Welcome back to the Beck Bodie Podcast. I'm here with Matt Marizio, at Matt Marizio, at BenBeck3333 on Instagram. Most importantly, at Beck Bodie on Instagram and various social media handles.
That's right.
Welcome. What do we got going on today?
You can email us at social@BeckBodie. I think
that too.
Social@BeckBodie. Any questions? Any concerns? Anything that you're listening to that you like, don't like? We want to hear it all. So today, I wanted to bring up something that it happens frequently, but it comes in like different masks, wearing different masks. And what I'm saying is uncertainty or emotional movement in the market. I think is probably the best way to describe it. What I want to talk about is how the coronavirus and how Tesla are related.
Okay.
All right? And I want to start out by saying I don't want to downplay the coronavirus by any means. There's people dying. There's a lot of families affected, so we feel for that. That's not what we're talking about. We're talking about how these outbreaks, these occurrences affect the market.
Right.
I feel like I need to qualify that. Clear disclosure that we're not downplaying the actual severity of the illness. But that illness, I looked on MarketWatch posted an article last week on, I think there was a dozen former health scares in the last like 20 years or so. SARS, AIDS, Ebola, Zika, swine flu, bird flu, I think there was a bunch of them. And in that article, there was a corresponding 12-month market return on the S&P 500. Meaning, in essence, how did that outbreak affect the stock market? And I think in only 2 occurrences in the last 20 years, there was even a negative return in the market. But living in it as it goes on, like we're in right now, the coronavirus, there's so much news and headlines of uncertainty that it makes any investor say, well, shoot, should I pull out now?
Right. Because so what you're saying, how does it affect the market, but more so the product of which, what should an investor do, or what should an investor be thinking about, you know, what their next steps, if any, should be.
Right. So what would you say to that? If I came to you and said, man, I'm reading so much stuff about the coronavirus, it's scaring the heck out of me, I think it's probably better for me to pull to the sidelines and wait. Like, what would you tell somebody that came to you with that legitimate concern?
That concern. So I think maybe to take a step back first and foremost, because we've talked about it in podcasts before about really the 2 types of people that are out there investing wise. There's investors, and there's traders. I would say a third would probably be savers. You know, folks that put safety of principle and, you know, low risk to all extent, you know, more than anything else. But for the purpose of this discussion, investors versus traders, and we only work with investors.
Right.
And the quick definition is, a trader is someone, not good or bad, just someone that focuses on the very short term, focuses on the price of a particular investment moving up and down, and looking to identify and take advantage of price movements in order to try to make money in the markets. Buying and selling in and out of things, you know, over time, frequently. Whereas an investor doesn't focus on the price of investment at all. An investor is more concerned with owning an investment today and, you know, and essentially in the context of a portfolio, is more concerned with what that investment is at 5 years from now, 10 years from now, or whatever their long-term objectives are. So we only work with investors, and as an investor, when it comes to whether it's the coronavirus or Ebola, what was that, about 3 or 4 years ago? I remember
14 maybe, or that Zika was it 14?
Yeah, I remember Zika. Zika's been around for a little while though too. You know, But I remember Ebola not necessarily what time period was, obviously, but I remember that there was I think it was about a 3-week time period where the markets really got rocked.
Yeah.
Like it was really, really volatile, and there was that even though 3 weeks is a short amount of time, there was that period of where, okay, where is this going to go? Because all of a sudden the news media starts bubbling up, and you're like, oh, geez, how many deaths, and what is this going to develop into?
And a trader might capitalize on that.
Absolutely.
Yeah,
absolutely.
But anyway.
So as an investor, we're faced with, and all investors are faced with periods of time like this, be it from diseases, viruses, but other things like just disruptions in the market due to whatever is going on geopolitically, economically. Trade with China more recently, impeachment talks now done, but more recently, and countless other things. So what as an investor, I think these short-term periods, coronavirus, are relatively irrelevant in terms of decision making for an investor. Why? You're not investing for the next 3 months. You're investing, long-term objective we define as anything greater than 5 years. And it was how we look at the world here. And given that you have a process, a methodology that you follow that is sound, that guides your decision making, you're utilizing great information, and you're eliminating emotion from the equation for the most part. If those are all intact, what happens over the next 3 months for anything that affects the markets really doesn't affect the long-term picture for a real investor. And so while you read the newspapers, geez, the death toll is climbing and this and that can cause concern emotionally in terms of what you should do with your investments, more often than not, it's stay put and just continue to focus on being disciplined to your strategy and what, the discipline, the plan that you put in place.
I love it. So you may or may not, if you're listening, may or may not have seen or heard or read studies that show if you're out of the market in X decades, your return gets cut in half. There's a lot of studies out there. All of those really just say you're better off riding the wave than you are trying to time the market, because that's going to be impossible. And let me go out there. I just want to say something about those headlines that you're mentioning. The news today is paid by advertisers, and advertisers need viewers in order to actually sell their product. And the only way to get viewers is to have people want to watch. And what sells? Drama. Dramatic stuff sells. So to talk about people, this is sad to say, dying from the coronavirus all around the world, that's more attractive than saying there was 7 million school buses today and none of them crashed and all kids arrived safely.
God bless America.
Right. God bless America. So
God bless American media.
Right, American media. So it's an impossible source for you to make justifiable decisions if you're saying, I use all of the media outlets and I come up with a consensus.
Yeah.
Well, you're using a bunch of wild, wacky, intentionally offensive opinions to come up with a sound, logical game plan. That's just going to hurt you.
But it is relevant to talk about because
for sure, because it won't go anywhere.
Yeah, because it are things that our clients and investors that we know and us we're faced with on a daily basis.
Yeah.
It's not coronavirus; it's something else.
Yeah.
And how does that impact? And whether you're invested in individual stocks or invested in the broader market and in index funds, which a lot of people do, whatever your investment strategy, more often than not, the short-term happenings across the world, while they do garner all this media attention, for any long-term portfolio, it's a minor, in a lot of cases minor, maybe almost an invisible blip on the over long-term radar screen.
That's a good way to put it.
So to speak.
So that leads me to that next, you talked about individual stocks versus broader market. It's kind of ridiculous, and I know you're going to get aggravated even having to talk about an individual stock.
I'll be aggravated.
All right.
Just get passionate.
Okay, so I like passion.
All right.
So let's get some bend back passion. I had a number, and I know you have, and we all have, because we're in this world, so people look to us for advice when it relates to investments and how certain companies are performing. Tesla has been brought up in recent conversations a number of times. I think it was a year ago, probably around this time, a little earlier, it was sitting somewhere around $300 a share. Mm-hmm. I think a couple weeks ago it was up around $900 a share. And that's on the heels of a couple positive earnings releases. So last year, this time, it was in a tailspin, don't touch it. It's going to ride the ground to zero and you're going to lose all your money. That was the headlines on Tesla.
Right.
Now, it's on a rocket ship. I've heard someone say it's going to be worth $3,000 a share. I recently heard that.
Right.
And people are saying jump on now, because if you miss the boat now, you're going to miss out on that rocket ship trajectory. Mm. And I think and now it's at $750 or something. So within a week or so, it's been cut by $150 per share. I want to hear your thoughts when somebody comes to you and says, "Hey, have you seen Tesla stock lately? What do you think we should do?"
Yeah, it's definitely a roller coaster.
Yeah.
Definitely wide gyrations in the price, and as you were saying before, which I agree with, somebody that has a trading mentality, right, that is not an investor per our definition at least, but is trading a particular stock, let's call it Tesla, it's my daughter's Tesla.
Tesla's your daughter.
Tesla's my daughter.
Don't invest
avid trader.
Well, maybe invest in her, but I don't think she's traded on the market.
Yeah, right. Well, just options. So, somebody that comes and certainly, it's, again, media driven, it's in the news, and in a company like other companies out there, but why am I blanking on Tesla's?
Elon Musk.
Thank you. Yeah. Somebody like that there's kind of that lore of kind of that wizard behind the curtain in terms of his history and how intelligent of a guy that I don't know him, so but certainly and how progressive he is for alternative energy and electric cars and
the guy who wants to go to Mars with SpaceX.
Yeah, so just that alone, you hear about Tesla all the time because it's interesting to learn about, and it's something that the world, in terms of the things that they're working on, the world is slowly but moving towards alternative energy sources and such. But how much to read into the wide gyrations in the stocks if we don't own Tesla, but in terms of the stock, but and that's nothing against Tesla or anything like that. They just don't fit our criteria for investment right now. But if we did, we would be ignoring these price gyrations. Absolutely irrelevant to our decision making.
Because we have a strategy.
Well, because exactly, of course, the strategy, the discipline that has worked very, very well for us over time is one that is constantly focused on the future. We look at the current price and price movements of individual stocks today, when they're happening today. It's essentially historical information because everything that is causing the stock prices to move today or in the past is based upon information that's already known about the company. Right? It's pricing information that's already known and expected. So in order to, in our opinion, in order to outperform and significantly outperform over a long time period, you have to use information that is giving you some indications of where that company is going. And I'm not saying that what on page 16 of some tech magazine is saying, or a tip from a buddy at the golf course. But I heard this. I'm talking about the most quality information that you can get your hands on, and that's really the top flight, top of their game research analysts on Wall Street, where it's their focus, it's their main role to project on companies like Tesla and countless thousands and thousands of other companies about, in really simplistic terms, what is this company expected, what do we expect them to earn over the next 12 to 18 months. Right. And because stock prices, if you look, stock prices are not pushed up by today's events or events in the past. They're pulled up by expectations of future earnings. That's how the stock market works.
Yeah.
And so while can be interesting and fun to focus on all the information from today and what's happening now, it really has a lot more to do with expectations in the future, and then along the way, how those expectations are changing. So it's fun to watch stock prices gyrate up and down. Funner, up versus down.
Funner.
Obviously. But in terms of that usability of information, it's really not relevant information to use about making decisions about whether you should buy or sell.
Got it. So it's an emotional one.
It's an emotional one. And
I like how you put it. So it sounds like the future is the horse, the stock price is the cart.
Yeah.
So I like that. The horse will pull the stock price in whatever direction the future looks like, up or down.
How about this one?
I like it.
How about, whoops, are we still live?
I hope so.
All right, well, we'll roll with it. I can still hear you.
Hope we're still live.
So,
so
my dad was a helicopter pilot in Vietnam and then in the Army National Guard for 20 some odd years. And I guess this is a bad analogy because helicopters, at least back then, didn't have radar, necessarily like a plane does.
Wow.
But there is a reason why the radar is in the front of the plane. Because it is giving you information, not about what you just flew through in terms of weather and so on, but about information in the future. In other words, this is the direction I'm going in. What does it look like 10, 20, 30, 40, however many miles you're flying? I'm about to get on a flight for Aruba, and when I get on that flight, the pilot's looking at, okay, what's the flight path? What are we going to fly through? Is there weather that we're going to try to avoid? Are we going to go above the clouds and so on? And whatever the case, I'm not a pilot, obviously. So, but same thing in investing is that we're not concerned with what we've flown through. We're concerned with the potential to good and bad, what's out there in the future. Our radar has to be in the front of the plane in order to make, to generate the types of returns that we want to return.
I love that. Like, imagine tomorrow if the pilot says to you, well, for the last 20 years on February 14th, we've averaged pretty relatively decent weather in Boston. You would probably be like, I really don't care because I'm flying right now and I want to know, is there a thunderstorm we're about to fly through?
But I'm going to challenge viewers who are watching this is that when you're making selections for your 401k account, or you are interviewing a financial advisor, and I'm going to challenge other financial advisors out there too, are you making decisions to invest based upon looking at a fund report, fact sheet they call them, based upon the last 1, 3, 5, 10-year performance record of that investment.
Right, the last 20 years of weather for that investment.
Just like, that pilot, hopefully, when I'm getting on the plane tomorrow, is not just looking, oh, well, last few weeks along this path has been fine, so we'll be good. No, we want to know what the radar and what the expectations are for that flight going forward. And you think about it in the investment world, a lot of what's done in the investment world is based upon past information. And then the next argument is a lot of investments in general don't tend over the long term to outperform the major indices, and I think it's because of this reliance on past information. Because there's while we don't think it's usable, there's surety. There's
safety.
There's safety in understanding. It feels safe at least. Think, oh well, this fund did this, so I should expect it to do this, and that's just not the case.
Right.
So then, what do you rely on? You have to rely on not performance numbers, but you have to sit, if you're an investor meeting with a financial advisor, you have to sit and you have to grill that person, him or her, about, okay, tell me the process at which that you're selecting investments for my portfolio. And that explanation has to make sense to you.
Right.
Has to make sense to you.
Has to make sense.
And it cannot, in our opinion, it cannot be based on any information of the past. It has to be looking forward.
Or emotion.
Or emotion, for that matter, as well.
Yeah, so what I'm hearing is, from all of this, the coronavirus, Tesla's rapid decline last year, ascent this year in the last few weeks, all of this stuff, making a decision to either pull from the market, buy into Tesla, any of that stuff, it sounds like it would be an emotional decision if you're coming to me as your advisor, or you're going to your advisor and saying, hey, what do you think about the coronavirus now? If 12 months ago there was projections of a coronavirus hitting the US or the world economy in January, February of 2020, and you made a decision 12 months ago based off of what you think that future might entail for companies affected by the coronavirus, completely different rationale and probably the right one. But if you're coming today to say, I think the coronavirus is going to hurt my companies, I want to pull out, I think Tesla's going to the moon, I want to buy in, it's an emotional decision, and don't do it. And that's how the market works. The market works like a human. It doesn't act like an economic machine.
Yeah, the best advice that I ever got was stop, never try to control the market. The market is in control or uncontrollable.
Yeah, like people.
Right, like people. So get rid of that emotion and work with the market. Understand really the factors that push the market up and down, and then once you understand that, you know that, oh, I can't control it, so I better start working with it.
Yeah.
And what are the factors that I have control over, that I can do to put myself in the best position to move forward with my investments.
I love it. Yeah. Well, if you didn't think the coronavirus and Tesla were related, now you know.
You heard it here.
You heard it here first. No Bonds podcast. No. We appreciate you guys listening. Follow us if you're interested at Beck Bodie, the company page, at BenBeck3333, at Matt Maurizio. Email us, social at Beck Bodie if you have questions after hearing this, or if you want to hear about future topics. We'd love to listen. We'd love to hear from you and make sure that what we're talking about is relevant, because this is the entire reason we do it. We want to help investors make better decisions with their money.
Absolutely.
Cool. Thanks for listening, Ben. Have a good trip to Aruba.
Thanks, man.
See ya.